It says we have to go beyond the pitch deck to start building businesses, because pitch decks do not build businesses. Most times with the pitches, it's 20% logic in terms of flow and in terms of really the numbers. The highest you go is 20%. 80% is really rhetoric, it's really showmanship, your abilities, the oratory power. Let's begin to tell the stories of our businesses with numbers. This is the JB Show, and it's your life by design. And I want to preface what we're going to be doing. I hinted at earlier, once we started, about how once I've observed entrepreneurship being done, in as much as we made a lot of progress in terms of the fact that it's mainstream, the fact that IPAM can have a center for entrepreneurship speaks of itself. But we now need to take entrepreneurship to the next level. One of the major points I made, I think I said earlier in a True Talk broadcast, it's actually on the JB Show. I have a YouTube channel, JB Show, where it says we have to go beyond the pitch deck to start building businesses, because pitch decks do not build businesses. So there's a practical discipline, there's a practical level of knowledge we are supposed to have. You can get an A. You can qualify as the best pitch. I said, again, I repeat what I said, most times with the pitches, it's 20% logic in terms of flow and in terms of really the numbers. The highest you go is 20%. 80% is really rhetoric, it's really showmanship, your abilities, the oratory power. As long as you can speak, you can convince people, you're persuasive, you get the A. You become the best speaker for that night. But how many of those businesses you had A in the pitch would actually you take those businesses and you could roll them to the market the next day? It's very hardly the case, because it takes a different set of skills to pitch than to actually roll businesses out to the public. So what we said we're going to do is practically bring in some businesses. Let's begin to tell the stories of our businesses with numbers. Now, unfortunately, I have to confess that we started the process in terms of going to the nitty-gritties very late, because whichever the businesses that we're going to bring here today, we wanted them to tell us the story of their businesses in numbers. So it should have been 80% numbers, 20% English language. We want to try to still see if we're able to do that. And so what we would do, they would run through their business, where they're at, what progress they have made, tell us 3 major challenges they think they're facing now as a business, and myself and my colleagues in the panel would try to profile them, things that we would write here, and tear this off and give them and say, go try this, and this could help you move your business forward. We should begin to tell the stories of our businesses with numbers. And so that's the level we want to go. And the first person to start, again, we should have actually had them up in a slide. We couldn't, but so that's why we have this whiteboard, this flip chart, so that we could take the numbers down and critique, and my colleagues would give feedback according to the numbers. Mr. Mohammed, so Grace Microfinance, put your hands together for him. If you could move over here, I want to, just move, go by the podium. You're going to be presenting by the podium. You have your, is that yours? Yeah. Let's go with them. So go by the podium. I'd like to welcome Tafadzwa Chinganga, if I got her right. But Tafadzwa, a lot of people may know you, they may not know you, but Tafadzwa is a principal founder for Muzambiringa. She will tell us what Muzambiringa is. And William, I don't know when we met, what year we met. But William, you underestimate. If you look at his size, you're underestimating yourself. But William is powerful. He's been a pioneer. I couldn't imagine how much of what we have here was part of his brain and how much was actually his ingenuity. But put your hands together for William. They would give us 1 minute introduction of themselves, because some of us might have been meeting them for the first time, but they tell us who they are. And then Mohammed will tell us about his business, 3 major problems that he's facing, and then we would now help him with what he can do to unlock unlock the challenges he's facing.
Yeah,
Yes, ma'am.
thank you, Mr. Jobas Bango. My name is William Conte. It's really nice to be here. I'm currently operations officer for the World Bank Group, focusing on private sector in Sierra Leone and Liberia. I was the head of department here for entrepreneurship and innovation. In fact, I launched the department and I launched this center, not just the space, the center in itself. So really nice to be here.
And so are you an academic or an entrepreneur? I challenged them just now. And actually, over the next couple of months, I'd really do my best to prove the power of entrepreneurship across all careers, across all professions, to prove that the most successful people in their trades and professions would be those who would be entrepreneurial, because they can scale. They can scale. They could see, they could build for the long term. Is beyond them. They're able to bring in partners. They're able to subject their own egos down to the level where they can actually build something that is bigger than them and outlast them. You have big businesses in Sierra Leone. They haven't grown beyond the founders. Founders, the same level, because it's just so we cannot go. But Taffy, you also have your own story with. Go ahead.
Well, good evening, everybody. My name is Tafadzo Chiganga. I go by Taffy. I'm the principal at Mozambiringa. We focus a lot on investment readiness and making sure businesses go beyond just being a business for name and can actually scale and last longer than the founder. At least that's our goal. Thank you.
Last longer than the founder. Businesses grow, scale, and last longer than the founder. Mohamed, you have 5 minutes. Like you go to doctor, and the doctor say, tell me how you feel. What happened to you? When me eat the heart, even time I get cold by the cough. Tell us the cough where business gets.
Okay, my name is Mohamed Tambakroma, as I said in my introduction. I'm the founder and CEO of Grace Family Microfinance Company Limited. Primarily we're into giving out loans to rural women in Waterloo and Tombo. We have 2 branches, one Waterloo, the headquarters at Waterloo, and branch at Tombo. Grace Family Microfinance started 3 years ago. That time I was working at Flour Mill, and then I started this business there a little bit with 300 leons or 300,000 leons, old leons by then. Going forward, I resigned my job, started the business, registered it with corporate affairs. Bank of Salone gave me a certificate by 2023 when we started the idea by 2021. So it started 2023 when I received a certificate from Bank of Sierra Leone. And we started doing the business, even though at that time there was little resources we have. As I said, just 300 leons, no partners, nobody on board. So we started with that, managed it to a point that we gave to one group, Waterloo, and then we managed, after collecting a few weeks, we give also another one group at Tombo. Now, from that point to now, we now have above 30 groups. 30 groups, women that we are giving loans to, right? Okay, now the critical things, the difficulty we are facing now, especially as a company, at this stage
How many clients are in a group?
5 per group.
So it means you could have actually 150 clients.
Yeah, above 150 clients, yeah.
What's your loan portfolio at the moment?
Our loan portfolio at the moment is above 500,000 new loans.
Say that again?
500,000 new loans.
If we could just take notes, because it's usually probing those figures. So it's your loan portfolio is about 500,000.
Yeah, new loans.
Old loans, 500 million.
500 million.
How many staff do you have?
I have 11 staff, including myself.
11?
Yeah.
11 staff. What's your monthly revenue?
For this past October, we made 46,642 leons.
What is your average expenditure per month for the company?
For now, really, our expenses is higher. In fact, this month we made no profit, we lost about 3,000.
So it means you generated, your expenditures was 49,000 leons.
Yeah, 49,000.
Because if you have revenue of 46 and then you had expenses of 49, then it means you could only have made 3,000 leons loss on the basis of that. Yeah. What else? What other numbers you want to share?
Well, you've asked the numbers.
The business have loans. Okay, so how do you fund this business?
We fund it through the loan we have given out. Collect and then give
How
back.
do you get your capital?
We get our capital through the, for now, we recycle the loan.
But you're now trying to go to a bank.
Yes,
I'm aware
of course,
you're going
yes.
to go
We've
bank.
applied to one of the commercial bank for loan, which the process is on for approval.
How much are you asking for them?
We asked for 100,000 leons.
And it's a funny stuff. If we do our mathematics to see, he's now asking for a loan of 100,000. Now tell us, what is it you want us to help you with?
Well, for now, really, the area I'm having difficulty in 3 areas. One is staff recruitment. Staff recruitment, staff capacity building.
No, tell us a bit more. When you say staff, what's that? Tell us a bit about that.
Well, the issue is when you start something, you might manage it, to a certain extent. But you reach a certain point, you need people that will come on board who know it better than you to help you scale the business. And now I have difficulty not only to keep them, but also to hire them, meaning people who know what they are coming to do.
And is it how much of it is down to the fact that you can only pay so much? How much of it is down to the fact that you can only pay so much? There's the competition in the market. You can't compete to have very good people because you can't pay them.
Yeah, of course.
What else? So what else?
So that's it. One, staff recruitment. Number 2 is capacity building.
When you say capacity building, what do you mean? Even the ones you have already, how to capacitate them?
To meet up with what we are to deliver to our client.
What's next?
And the third one is access to finance, which is very important.
Access to finance. So Mohammed is saying, I know because we've been working with him, he's trying to go to a commercial bank to get 100, he always said it's 100 million, 100,000 loans. And to on-lend to clients, you need to now ask, what's your rate of interest you're giving to your clients?
Well, I give 35%.
He's giving them at 35% for 6 months?
Yeah.
And then the commercial bank would be giving you this loan at what interest rate?
29%.
29%. 29% from the commercial bank. Now, okay. Again, I say this is where this would shape businesses in this country. If businesses begin to tell their story with numbers, not literature. Taffy and William. This is Mr. Mohammed. He's seeking your help. What can we say? We're going to cut off whatever we're doing. We'll cut it off and give it to him. So salient, solid, core. 3 things. He cannot pay staff enough. Even those we have, they have weak capacity, and he's struggling to get. He's running at a loss. He's been running at a loss for a while, right?
Throughout this year, in fact, throughout this year.
Every month, everyone. So it's a continuous process. He's running at a loss. He cannot cover his expenditure. The revenue he's generating from the loan portfolio cannot cover the expenses, his operational expenses. How do we help him?
Yeah. So one question, then I'll provide some input. What is your PR, your portfolio at risk right now?
Presently, we are at 1.40.
1.40.
Yeah. Of course. Less than yes. Yeah.
So you said
1.40
is 1.8.
PR 30.
By the way, what's PR, William? You're asking.
Portfolio at risk. Those that have actually exceeded the time they're supposed to pay, and having the probability of turning to a bad debt. Yes.
People who owe you can't pay, so it's a portfolio that's at risk.
Yeah.
Go ahead, William.
Yes. So the first, your margin is quite low. You lending at 29%.
No, I'm lending at 35%.
You borrowing at 29% and you lending at 35%. That's just 6%. Considering your operational cost, I believe.
Magic there. Let me tell you the magic. What's the magic?
Well, the money is coming for 1 year. I'm giving that money for like 1 year. I'll be giving that money twice.
Okay.
So the 35% is for 6 months. The
6 months.
Is for
so it's like add 35% too.
So if he is able to collect the money back and on lend immediately,
he can make some margin.
70% from the 29%.
Yeah. So, but again, if you have a current portfolio of 500,000. If I were in your position, first and foremost, I will not ask for a bank facility of 100,000 because one reason, you are having a net negative effect and you don't scale a business that is losing money. You only scale after the business begin to make positive margin, because when you scale a business that is making loss, what does that mean? You expand your losses, but then even if you're just making 2% margin, that is the first point you really begin to think of scale. So taking a facility at this stage is not a good idea. That's just 20% of your portfolio. It's not going to make a dent into it. So the priority should be, how do I improve on this 500,000 and move from a point of making losses to the point of making a profit? I think that will be my first contribution, and I'll allow Tafi to add something there.
Thank you, William. I have one question. Well, actually, it could be two. What's your loan recycle period, your loan cycle period? If you lend money to someone?
6 months, 24 weeks.
6 months for every loan?
Weeks. Weekly, yeah.
Okay. And then how did you get to the 100,000 in terms of top up that you need?
How did I get?
Yeah.
I don't.
How did you decide that it should be 100,000? Did you?
Well, I did not do any calculation.
Okay.
I imagine loan portfolio I have now.
Yeah.
All I need is to just have some capital to add on to what I have already.
Okay.
Yes, no
All
calculation in that.
All right. So I would just say, as a start, your business is a numbers business.
Yeah.
You know how much you make for every amount of money you lend out. And as such, you can estimate your optimum operating position. It will tell you how much money you need to lend out for you to be able to break even.
Yeah.
And that's the first point of call. You need to know that number. How much money do you need to be recycling within your business for you to be able to at least break even and cover all of your costs? And then your goal should be to get to that point of lending that amount of money. So that amount of money could be 600,000. It could be 1 million. It could be 700,000. So even if you take this loan for 100K, it's not going to get you to profitability. It's better for you to take a loan, if you are to take a loan, that gets you to profitability and addresses the issue of your optimum operations. This is what I'd say is the first option. Then the second thing is, when you're looking at access to finance, where have you tried to source funding from so far?
Well, we are in discussion with people who have given out interest in investing into the company. So that discussion at the early stage, because equity investment, yes, because we want to position the company for us to be able to give out equity that will be a win-win situation. So we don't want to rush into it.
Yeah, so I think from my own perspective, it's never a good idea to grow your business on loans, because loans come, even if there's a good profit margin there, if for any reason at all your PAR changes or your loan recycle period changes, the assumptions that you're making in terms of the money you're lending, you're borrowing from the bank to put in your business, will have a big impact on your business itself. So what I would say is, there are alternative sources of investment that you can get, and it will be worth exploring those.
Can you give an example?
An example is, one, just your friends, family, angel investors, individuals, more of individuals that can give you small bits of money. It doesn't have to be one big lump sum of money. You can have different people contribute 5,000, 10,000, 50, and then you have a share of the profits that you make, so you can have a revenue share with them before you talk about equity, because your business is still very, very young now to be in a conversation for equity. In a worst case scenario, if you're opting into equity arrangement, I highly recommend you go for something like a convertible note or a safe note. That is an agreement that you will give them equity at a future date when your business value can be ascertained. At this point, it's difficult to ascertain the value of your business because it's pretty much coming out of the idea stage. It hasn't done much. Its potential has not been seen. The kind of value you can create with your business is not tangible. So I'd say try by all means to beg people. If you're an entrepreneur, you're going to beg. You're going to have to beg people for their money. Give me small, 5,000, 10,000, that 100,000 that you're looking for. It's 20 people that give you 5,000. And I think within your network, you should be able to get something like, you could possibly. Yeah.
In fact, recently what we've introduced is the Osusu scheme.
Yeah.
Wherein our clients also receive their money with us through the Osusu scheme. Some will save 2 months, 3 months, up to 6 months. So we also use that money also to give out as loans.
So question, Taffy is telling you, are you ready to keep up with that? Are you ready to, how far are you? Unfortunately, because we're running out of time, we can only deal with one constraint, but we could say a bit. You could actually talk to Taffy after the session. This is what this is meant to be. Taffy's made some very strong points here.
Yeah.
Now that, you could, with 10, 15 people, and profit share. If I make profit out of this, and you have to calculate. Taffy is saying 1 point again. You can't just go for 100,000 euros. There's a break even that you calculate that tells you the amount of loan you're supposed to give out for you to break even. Anything less than that amount, you're putting yourself in more trouble. But to be able to do this, and second point that you could, family and friends. And don't go for loan. It's a big argument. After the event, you can continue for talk to Taffy. But can you give him 1 minute on the staffing stuff?
Sure.
You can't pay. What do you do when you can't pay? You don't have enough to pay the staff, and then the staff quality is low. What do you do?
I think the first thing, 11 staff for 150 customers,
that is always your pointer.
Is it about how many groups? 30 groups. It's quite a lot of staff, So there are a lot of inefficiencies, with the staffing, So the first thing you really need to look at that, because even at 500,000 portfolio, 35%, which is really very high for impact, you're making about 175,000 extra every year. But the reason why you're making loss is because your operational cost is high. So you have to go and review that operational cost.
Yeah.
And just as Taffy said, it's good to get that other easy financing from friends, families, and maybe sweat equity. But even with 500,000 portfolio, in 2 years, you can do quite well. Charging 35%, nobody's stopping you.
You have to watch your cost. Anyway, ladies and gentlemen, let's everyone else is coming. No. All right, let's do 30 seconds to tap if you want to do something. Right.
Okay, so I'll also just highlight the importance of capacity building within your own team, right? Don't try and recruit people that already know what they're doing, because they're going to be expensive and they're going to be difficult to retain. But if you can hire people in your type of business, you need honest people. You need people that are reliable. If you can find people of good character and good standing and build their capacity, teach them how to do the work, the cost for you is a bit high in the beginning when you're training them. But if you give yourself 1 month and say, I'm going to do intensive with them in this period of a month, you'll see the results over a period of time. And then at least you can grow with them. As they're growing in their career, you're also growing as a business. Where they need to be paid more money, you're in a better position to actually pay them than to try and hire from the top.
Yeah, I think that's what affected me this year, because last year I made above 200,000. Profit return after all expenses.
Yeah.
This year I wanted to bring people on board who know the business that will handle it and then help the business to grow. And then when you bring them on board, you need to pay them high. And from January to now, that has affected my returns.
Yeah. You need to cut your operating expenses.
Cut your operating expenses. Ladies and gentlemen, once again, Grace Microfinance. I hope this has been helpful for you.
Yeah.
Will they cut this and you? But make it louder, make it louder. Thank you very much. Well done, Mohamed. And like I said, this is not meant to be theory, it's meant to be practical. It means what we have said here. He's going to have this flip chart. And, we have William, you have Taffy's number. They could spend 30 minutes to just document this again, so that practically, it's not just those of us who are in here tonight, but because we're capturing this, we're doing the recordings, people outside this room would see the kind of questions, the kind of thinking that has to go into building their businesses.
This is the JB Show, and it's your life by design.